It's 4 o'clock. We're going to go get started. We're live on Facebook. Last week we were on IG. Welcome, everyone. My name is Davon Reeves. I am the co-founder of Epiq Collective. We are a commercial real estate fund where we focus on multifamily and hotels, and we have weekly conversations with commercial real estate experts. Typically we've been on Instagram Live, but we changed it up this week. Now we are on Facebook Live, and this week our special guest is Kendra Plummer. She is a hotel underwriting expert, and I'm going to pass the mic over to her so that way she can tell more about herself.
Thanks, Davon. Hey, everyone. Again, my name is Kendra Plummer. I am the founder of Elise Capital, which is a real estate investment and advisory firm specializing in hotels. So I've been in this industry for about 12 years now and still growing in it and loving in it, and have been focusing on the hotel sector of commercial real estate. So thanks for having me.
Wonderful, wonderful. Thank you for joining us. It's such a small world. I guess are you like my mentee or something? We've been knowing each other for years, starting back from NABHOOD, right?
Yeah.
The National Association of Black Hotel Owners, Operators, and Developers. And you are very aggressive and assertive, which I love. And you wanted to get into asset management, hotel asset management, right?
Mm-hmm. Originally.
Yeah. Tell us. We want to know about you. So nobody cares about me. What about you? So how did you get into the hotel industry? What made you decide to get into the hotel industry? Let's hear it.
So it's kind of funny how I got into it, but I really think I've been in hotels like since I was young. So my family's from the Caribbean, and whenever my parents would bring us back to like either stay with my grandparents or visit family, like we would stay at their house. And then for our vacation part of it, we would go to a hotel or something, or a resort, or all-inclusive types things. And I loved it. Like that was one of my favorite parts of the trips. So ever since then, when it started getting into high school and it's like, okay, what are you really going to do? I still loved hotels. Like that's something I've always been passionate about. So I decided to make a career out of it, and went to school for it, realized that you can get into the ownership side and actually own one. So it's now my goal to own a hotel in the Caribbean, and I'm still pursuing that.
Wonderful, wonderful, wonderful. Yeah, we were actually going back and forth this week about having this conversation, given what's going on in the country, actually in the world, given what happened to Mr. George Floyd and Miss Breonna Taylor, and our country is in a civil unrest. As far as with a lot of the protesting and rioting. But one thing that I have been noticing on my different social media platforms is the increase of African Americans or our fellow Black people wanting to invest more in the Black community. So that's why I thought it was relevant that we still continue to have this conversation, because as you're aware, Kendra, a lot of people, they're not aware that you can actually invest in a hotel, meaning own, or even for the people who are in the hotel industry. Yeah, I know when I got my start off in the hotel industry, I was involved with NABHOOD. Didn't really I still didn't comprehend, hotel ownership. And it's not like a straight path or anything. It's not a clear path. It's not a defined path. I didn't really understand it, working at the front desk. And then, but I knew I wanted to get into hotel ownership. And that's just for me working in a hotel. So just think about the people who don't work in a hotel. Right. So that's what still want to, again, just to have this conversation, just to get people aware and diversify their portfolio. And your background is in hotel acquisitions. Mine is in asset management and operations, but yours mostly in acquisitions. So you want to talk a little bit more about that?
Yeah. So, I agree to your point as well that a lot of people don't realize that ownership for them is actually possible, which is another reason why, like you, I'm doing what I'm doing so that we can really spread the word and get more minorities into ownership, because it is a great wealth generation tool. And with that, then there's more room for empowerment, there's more jobs, and really it's a great base for the community. So how you get into acquisitions is it's almost similar to taking a trip or vacation in the way that you would, which I'm sure we all wish we were on a vacation right now. But first, you have to actually figure out, if you're taking a trip, okay, where are you going? So that's the same thing when you're trying to buy a hotel. You're needing to figure out what type of hotel you're looking to get into, and also what location is it going to be in. And you need to figure out your market research. So when you're going on a trip, let's say we're going to Jamaica, it's a great idea to go to, but why are you going? What's really dragging you to that island? And that's the same with your market research. So you have to figure out, okay, what are the demand generators in that area of the city that you're looking for, or the hotel deal that you found? So is it that there's a university close by? Are there different hospitals or office buildings? What's really drawing people aside from just the leisure demand? Because in our industry, we have leisure demand, which is your regular people going on a trip just for fun. And then you have your business demand, which are people who are coming for a specific reason that might be job related. So you want to be able to have a good mix of both, just in case something happens where people don't want to travel for fun anymore. Jobs are probably still going. So there's always going to be a mix, and you want to diversify your demands that way. So that's the first thing you want to do is, one, source the deal and make sure it's in a city or area where there is good demand, and also accessibility. So thinking about, are there airports nearby? Is there a cruise port? Are there highways? Just how are people going to get to where you are? And then the second phase of your trip planning becomes the whole of the actual feasibility of how are you going to pay for it, and what does it really have to offer? What exactly are you going to do when you get there? That part of the hotel deal path is called the feasibility analysis. So you have the financial analysis and the market analysis. And the market analysis is really just looking at your competitors and also what the market stability is like. So does it even make sense to be in this market that you've selected? And then the financial part is the performance. So what has the hotel done historically, and where can you as a business owner maybe change the plan a little bit to get more revenues and drive more profit? And then the last part is actually closing the deal. So similar to when you're taking a trip and you have those group trips and it comes down to the last of, you actually have to pay, and maybe you started out with 15 people, but now only 7 are actually willing to put the deposit down. The same thing happens when you're buying a hotel. So you have your whole group of investors that said they were interested at first, but you have to really sell it to them for why they should invest in your property. And that's called the capital raise stage. So in this section of buying the hotel, it's the last part. You're in the home stretch where you're reaching out to your investors and saying, this is my deal, this is why you should invest in it. And then you're also reaching out to your lenders and saying, this is why you should give me a loan on your property. So usually in a hotel, let's say the hotel is worth $10 million, it doesn't completely make financial sense to do that 10 million all by yourself. So the best way to do it is to have leverage on it to maximize your returns. So most lenders might give you like 65% or 85% of that purchase price, and then it's up to you to raise the remainder. So it could be, if they're giving you 65% of 10 million, then you have to raise 3.5 million on your own. So it makes it a little bit better to be able to actually attain that acquisition.
Wow, you just know threw a lot of good stuff out there. So
That's what I'm here for.
so let's talk about a market. So a market in the hotel space is actually different when it comes to other sectors of real estate or other, business related when it comes to market. Can you break that down for the folks that may not understand what we're talking about?
So I guess market in this aspect, there's a lot of different classifications. So it can be market as in, is it a primary market, which would be like maybe your top 50 metropolitan areas. It could be market as in the actual classification of the hotel. So select service versus a full service, whereas a select service hotel is going to be something like your courtyard or your home two, where you're really just getting the room as your revenue and not a lot of food and beverage. Whereas in a full service hotel, that's your Marriott's, your Westins, where you're getting your rooms, food and beverage. You might even have a spa at that type of property. So that's another aspect of it. And then you also have to think of the classification. So is it an economy level, like motel type of property, or is it a kind of luxury class, like a Ritz or Four Seasons type of place?
Now, so you talked about the market. So hopefully people have a better understanding about the market as far as when we look at market. We're really just talking about, our competitive set or comp set, if you would, the different hotels that are similar to our subject property. So then after that, you actually talked about more the financial feasibility of it. Can you go just like maybe the 3 top things that people should look for when they're going through the financial aspect of the feasibility part?
Sure. So, I mean, first and foremost, the reason you're buying a hotel is to make money off of it.
Right.
So, yeah.
Possibly get some discounts. Wait a minute now.
That's true too. That's another perk. But the biggest reason is that so that you can drive a profit. So the first thing you're looking for when you're doing a financial analysis is, does this hotel even make money? And if it doesn't, you need to find the reason why not. Because in some circumstances, the hotel, maybe they just don't have a good operator and you can do a better job operating the hotel. So that would produce money, and that's what you would do an analysis for. But if you're doing an analysis and it turns out that it's going to be very minimum profit or negative profit, you should just not go after that deal, because that's not the point of why we want you to be an owner, because you should be generating wealth. The second thing you want to look for is just actually, like how we said before in the market analysis, in that competitive set that you just mentioned. You want to look at how other hotels in your area are performing. Is it that everyone has a very low occupancy or low average daily rate, which is the average that people are paying per night to stay at the hotel? If those are very low, then there might not be any potential for you in that market. And so therefore, you can't, make money out of nothing. So you wouldn't want to go after that sort of deal as well. And then lastly, you want to see what the lender requirements in that area are. If they require a certain debt service coverage ratio, which is the amount of net operating income in comparison to how much you would have to pay on your loan. If they're not covering that, or if your hotel isn't covering that in NOI, then again, you wouldn't want to go after that sort of property, because you don't want to end up automatically defaulting on your loan.
Okay. So we talked about the market part of the underwriting, the feasibility part, and then you talk about the capital raise. So from your experience, what do you think, I know you mentioned one, probably most important, the lenders want to know, will you be able to, repay the loan at the, after debt coverage, or debt service, excuse me. what do you think lenders, hotel lenders, are the top 3 things hotels are looking for when it comes to lending to hotels?
Okay, so they're honestly looking for a lot of the same things that you are, as an owner, are looking for. So as an owner, you're looking for profit, and as a lender, they're supposed to be making sure that you're able to cover, because where they get their profit is in the interest rate. So if you can't cover your debt payments, a lender doesn't make anything by lending to you. So they're looking for the same things, the stability in the market. They're really looking to see, does the deal that you're presenting make sense, and can you actually back it up with statistics? So they're looking for, again, the market analysis. They're looking for your financial performance, which for them, they'll do a lot of track record looking or searching. So they're trying to figure out, what on average does this hotel typically produce? Have they been producing a steady amount over the past 5 years, or does it have potential, or is it a obvious potential that it has, or are they just thinking that you might have some sort of secret sauce to make it great, but you need to be able to explain why they should invest in it from a lending perspective. And then the way that they kind of mature and make sure that they're taking the right metrics on that is through that DSCR, the debt service coverage ratio that we just mentioned.
All right. So I want to become a hotel owner, right? So
Yeah.
you just walked me through the top 3 things that I should be looking for or getting prepared for from a lending perspective.
Mhm.
The things to look for when I'm going through the underwriting phase. So what will be the next part of my journey into becoming a hotel owner?
So the next part is when you have to close the deal. So that's in addition to the lender side, which a lender is also, I guess one thing to add, is going to look at the purchase price too, so that they can know how much they're lending. And a lot of people don't realize, but they look at the purchase price through a loan to value ratio.
Mhm.
And that loan to value ratio doesn't necessarily mean loan to purchase price. So that value that they're looking at is the actual appraised value. So you want to make sure that you're being realistic in your valuation of the property and not paying over what it's truly worth, if you're not going to be able to secure that loan. And then after you've secured all the loan side of it, you have to then go to your equity, which is your investors. So you begin with your deal kind of making it an exciting thing to get into. So you're going out to someone who either has a fund and saying that they should invest with you. Maybe you're
Like
looking,
Epiq.
yes, exactly like Epiq. So you're going to people like Davon at Epiq and saying that, this is a great deal. I want to be a part of it, and you invest in the hotel that way. Or you could become a sponsor, which means you're completely leading the hotel deal and you're maybe raising funds with family and friends. Or one of the easiest ways to do it is by investing in a REIT, which would be similar to buying stocks. So a REIT is a real estate investment trust. So some of those are like RLJ, for example, that's pretty popular.
And
Yes, exactly. And it's almost the same as buying stock. So you could become an owner in that way.
Nice. I mean, you just dropped, again, as we say, what gems, right? You dropped so many gems. So just a plethora of information as far as what that journey looks like to become a hotel investor. Because I'm sure a lot of people, it's new, class set, it's complicated, it's different. Even the underwriting is different when, different from like if you're underwriting a multifamily or looking to purchase a multifamily or
Yes.
office space or retail space. Even the appraisal value, like you mentioned, valuation, hotels are based off not the building itself, but the performance of a hotel. And a lot of people, they don't understand, that metric. Did you want to speak a little bit more on that?
On the performance valuation, sure. So I mean, how much time do we really have today to go into the valuations of it? Uh, but it is a long process where usually the best way to do it is by having boots on the ground out there. So if you see a deal that you like, I highly suggest visiting it to make sure that everything that seller is telling you is actually what it is. That's first and foremost. And part of that comes with your due diligence process as well. So the reason you do due diligence is to make sure that what they're selling to you is actually what it is, and they're not giving you a false asset. So it's really to protect yourself. So that includes like doing the property valuation, but also a kind of environmental survey to make sure that the land and everything is good. There's not going to be some crazy risk that comes about from it. You probably would have someone do a feasibility study for you, which is going to just go more in depth into the accessibility of the area and what the true potential is for that asset. And then you also want to always not be completely optimistic, but be a balance of both sides. So with any type of investment, there's great opportunity for risk, but there also is always going to be the possibility, great opportunity for returns, but there's always going to be the possibility that risk can come about from it. So you don't want to just pretend like a risk doesn't exist. And you want to go in kind of with both hats, both as the happy, excited, this deal is amazing, and that's the hat you have for your investors. But you also want to have the side where you're truly considering all things that could go wrong and what's the realistic piece of it that actually could happen. So that way you're better prepared to protect your asset if those things did come to pass.
So you actually mentioned, again, a lot of great information as far as going through, the pathway of becoming a hotel owner or even investing in a hotel. Now, for the first time hotel owners or folks who don't have any experience in the hotel industry, would you recommend that they partner with an asset manager, hotel consultant, or broker to walk them through that process?
Definitely. I mean, I recommend a lot of things that someone who has no experience should do. So you should have a consultant. That way you have that expertise. An asset manager, basically their role is to kind of be the liaison between you, the owner, and the operator if you decide not to be the operator. And their role is really to make sure that your asset is managed properly so that you can drive profit in the best way possible. And then I also suggest that you get educated, which is going to conferences. It's doing education courses like the crash course in hotel ownership. And
talk about that. Where can you find that? I didn't know there was a course.
Yeah, so there's some new courses out there. So Crash Course in Hotel Ownership just launched last week. And you can visit that by going to my page, which is elisecap.com, or page or website. And on there's an education tab, and that will take you directly to the link for the course, which is currently on Teachable. So you can find it at hotelownership.teachable.com. And perhaps Devon will post the link later too. But that is a great way for you to kind of get your feet wet in knowing the terminology, and also how to completely go about finding and just valuating your entire deal. Because when it comes down to it, you have to know different terminology, which a hotel asset has different terminology than multifamily. So when you're presenting to your brand, you need to be speaking in their language and things of that sort. So the education when you're becoming a hotel owner is extremely important.
Now, you talked about the crash course for hotel ownership. Is it just does it just focus on the acquisition process? Are there different courses? Like, can you walk us through what that looks like on the course?
Sure. So It's actually almost a hotel ownership school where there's going to be multiple courses. So one course that we currently have on there is just about the entire hotel ownership overview. So it will take you through every single step and just give you the overview of what you should be looking for at each step in the process. There's another course that's the crash course in hotel underwriting, which is coming out tomorrow, actually. So that's exciting. And with that one, it's going to really get into the nitty gritty of how do you do a market analysis? How do you do the financial analysis, including forecasting and pro formas? And then the third and almost most important component that comes after those two is the return analysis. So how do you calculate your IRR, which is internal rate of return, which is basically the metric that tells you how much of a return you're getting on your deal if it was in present day dollars. So how do you figure out all of those metrics to make it a strong analysis and to know if that truly is a smart deal to be investing in?
Now, I typically recommend first-time hotel owners to look into the limited service or economy brands as their first time, so that way they can kind of get their feet wet and really understand what the hotel industry is about. So what should first-time hotel owners look at when it comes to IRR? Like, what's a good average or range that they should be looking at?
Sure. So there's kind of two IRRs that you look at. There's a leveraged IRR, which means that you're including the debt in that. And then unlevered is strictly just the equity being put in. So usually for an unlevered IRR in a safe deal would be, no less than maybe 16% IRR, and that's still pretty thin of a deal, where a great deal would be, in the low 20s or something around there. And that's more reasonable. If you're getting an IRR of like 80%, you probably did something wrong in your analysis and should go back and make sure that either the purchase price or your projections are actually realistic.
Now, you mentioned a safe deal. What does that mean?
So a safe deal means that you're kind of better when it comes to risks that can come about. So you can kind of take a hit. So for example, right now with the coronavirus, and a lot of hotels are not producing any income at this moment. And they haven't been for the past 3 to 4 months at this point. So when it comes, if you had an IR projection of maybe 24%, you kind of have that wiggle room with your investors to still be happy, where now your investors might only be getting 20% if they were to sell today, because of how it's going down. But whereas if you were at an IRR of only 16%, usually something around 10% isn't going to be acceptable for a lot of investors, because it becomes not worth it based on how long you've held the property for. So a safe kind of gives you that wiggle room where if something really went bad, you could still get a good enough profit, whereas more of a risky means you're just getting by.
So talking about the market, we talked a little bit about lending and the times. You just mentioned coronavirus or COVID-19. Do you think that it's the right time to acquire hotels?
So I think the great thing about the hotel industry is it's a very fierce industry where it will always come back even when it's down. But for right now, it might not be the perfect time to invest in a hotel, but it is the perfect time to get yourself ready and prepared for when these deals start coming back in heavier rotation. So it might not be the time to really go into a hotel right now, but the time to be doing things right now is to be getting your funds up so that you can invest in a hotel, is to be making relationships with people like myself, like you, who are either consultants or have a fund. It's time to be looking for people to partner with and really foster relationships. And it's also time to start practicing how the investment process would go. So it's maybe, getting that education and then trying to apply it on a deal that you've seen trade historically. But I do think that, the trading is going to come back probably like end of this year through next year. And it's going to be heavy because people have been kind of on pause. There's been a lot of people over the last few months who have wanted to sell, but just out of respect to the environment, they've been holding on to their property. So they're going to be ready to sell, and you need to be prepared for when all of these people are ready to start with their transactions again.
Nice. So based off your 10 years or 10 plus years in the hotel industry, what are some of the tricks that you've learned?
So some of the tricks I think that I have learned is to just always trust your gut. If you think that there's something, fishy about the property, or that it might not really produce the returns that the seller is saying, then really investigate it and go after it yourself. If you think that a deal is going to work, then keep pushing it and pursuing it until someone says, yes, I'll partner with you. One of the groups that I worked with previously, there was a hotel resort that we were looking to acquire, and we thought it was worth more than a lot of our investors wanted it to be. But we kept pushing. We're like, okay, we know that we have the ability to really crank this property out and have it produce the returns even at this high purchase price, and we think it's worth it. So we kept pushing. We found new investors, and we found a huge investor. We closed that deal, and it's cranking to this day. So I think being able to trust your gut, and if you really want to make something work, then you have to be kind of ferocious with it and continue pursuing until someone listens to you.
So it sounds like that relationships are definitely important. Both you and I, we know a hotel broker, as he's a lot of people have mentioned, he is the hotel broker. Omari Head, do you recommend working with hotel brokers when looking for a hotel?
Yeah, I absolutely do recommend getting a good hotel broker like our hip hop hotel broker. And the reason for that is because they're looking at it from both perspectives. So they won't sell something that they don't believe in themselves. Usually there's always going to be something that they can say great about the property. And they also have to have gone through, and they can't necessarily sell you something false. So that kind of helps you with your process. But what
they've already done their own internal evaluation to see with the price. Yeah.
So they probably have already talked to the seller, who maybe the seller was saying, oh, I want to sell this hotel for 50 million. And the broker already knows that market. They know what hotels of that type can do. And they start negotiating with the seller saying, you're probably only going to get maybe 45. Let's put it on the market for 45 and see what happens. So they kind of already have that first phase of making the seller be realistic. And then they have more knowledge than just the seller, because the seller is very in their own bubble of, this is their property. They like what they like. Whereas the broker knows that entire market and they've seen it all before. So you can really go to them for knowledge on how you should be valuing that property. And then it also just helps with the ease of the process. Their job is to get you all the information that you're requesting if possible. So they're kind of that liaison between what you need and what the seller is willing to give you. So it kind of relieves that headache of you having to go attack the seller for information, where you can let them handle that.
So in addition to having a hotel broker, an asset manager or a consultant, Who else do you recommend to have on your team? I call it an A team. Our previous guest last week, Marcus Daniels, he mentioned Dream Team. So who do you think should be on your A team when it comes to acquiring a hotel?
Yeah, so it's great. You already mentioned the asset manager, you mentioned the broker. With every real estate deal, you probably need some sort of attorney or legal counsel. So I highly suggest that. But I also suggest having a good operator in the hotel. So basically, the operator is the person who's running the day-to-day operations in the hotel. The name is telling. So if you are going to be an owner operator, you should first and foremost understand how hotels work. If you don't feel as comfortable being the operator, maybe you're not as familiar with hotels, but you still want to own the property, you have the option to actually have a third party manager. And so this could be maybe if you've done a brand, for example, if you decided to buy a Courtyard, you could have Marriott be that franchise management group. So they could be the manager there, or you could go out to a third party operator who only focuses in the operations of a hotel. And it's really important to have someone like that who's really knowledgeable, because again, the whole purpose of it is to have the best profit possible, and their purpose is to be able to drive profit to the bottom line.
This is just good stuff. And the reason why it's good stuff, the reason why I like having these conversations, because again, it opens people's minds up when it comes to hotel development or hotel acquisition, which I recommend for first-time hotel buyers to acquire before they develop, because that's just a different animal in itself, which I'm sure you'll probably agree to. So we talked about the steps involved in acquiring a hotel. We talked about, having an A team. We talked about the tricks and stuff that you've learned from being in the hotel industry. What else would you recommend for the folks listening in who want to become a hotel owner, or even invest, like you said, become a passive investor, and work with a sponsor?
So I would continue to recommend and also reinforce just how much of a profit and revenues hotels actually can produce. They truly are different than any other asset class. And the reason for that is because they aren't just real estate. A hotel is real estate, so you get that in the value. But the most important part of the hotel is the fact that it's an operation as well. So it's a people business. It creates more jobs than most other, I should say, real estate class. So it's a great way to kind of help with the employment rates that we have in this country. And then in addition to that, it's the most flexible in terms of revenue producing when you're talking about a real estate class. So for example, in multifamily, usually the way that that works is that you have your tenant signing a month-to-month lease, or maybe it's an annual lease, or however it may be, but you're having a fixed amount of income for that period. In a hotel, you don't have to have a fixed amount of income. You are charging a rate daily, which you can change however you want. So you can really have the ability to produce more revenues with a good revenue management system. So when demand is high, you're allowed to have your rate be higher and therefore produce more revenues. And if your rate is lower, you're allowed to maybe change the staffing up so that the expenses aren't as high. And that's where the importance of a management team and an asset manager comes into place. But I think the best part about hotels is that factor that you have, more flexibility to really control how much in revenues you're going to be able to gain on. And then, like you mentioned before, that hotel ownership discount isn't too bad either.
So that's good to actually end on the good stuff, because hotel discounts are, to me, I love them. But that's one of the perks of being a part of the industry. But how can people find you? How can people learn more about Elise Capital? How can people learn more about the crash course? How can more people, get involved with you?
Sure. So you can follow me on Instagram, which is Elise Cap, or at Elise Cap for Instagram. On Facebook, it is Elise Capital. And we also have a website, which is elisecap.com. On the website, you'll be able to schedule a free consultation with me if you want to speak on either the steps to ownership or just different underwritings and looking over deals or anything in terms of hotel ownership. We have the consultation that you can book directly on the website. Also on the website is that crash course. So if you're looking to get just your feet wet in education and maybe you're not too sure about hotels, but you want to learn, that's there for you too. And I'm also available via email. So it could be kendra@elisecap.com.
Nice. Well, there you go, folks. Thank you so much, Kendra. This has been great. I've been doing a lot of conversations about hotel ownership, and as I'm sure people have been listening, it's so much you can learn.
Yes.
And you put more information out as far as from more of an underwriting perspective, because that's truly your background. Mine is more of asset management, but your more is definitely on the feasibility side when it comes to acquiring a hotel. So you put a lot of good information out there, because like I said, this is a time where they're thinking about investing. They just didn't know what to invest in. And then, whoop, here's a light bulb. You can invest or buy a hotel. So thank you for that. For the folks who are listening in or joining us, and you know where to find Kendra. She just gave you the information. If you need her help with underwriting, coming up with financial models, which is definitely needed when it comes to underwriting, and coming up with those pro formas and projections, and understanding the investment analysis side, having a strong model and really understanding those numbers. Because like she said earlier, if you have an IRR of like 80%, something is off.
Definitely.
So, like real off. You can just eyeball it and tell. So yeah, connect with her if you really want to get involved as far as understanding how to underwrite, or if you have some upcoming deals and you just need a set of professional eyes to take a look at it. Reach out to Kendra Plummer. She's awesome. We will see you all next week for our weekly conversations. We hope that you are enjoying it. We have weekly conversations with different experts in the commercial real estate industry, because our goal is to get more people of color to invest and get involved in a commercial real estate industry. My name is Davon Reeves, co-founder of Epiq Collective, and thank you again to our special guest, Ms. Kendra Plummer. Be on the lookout tomorrow for the crash course on hotel underwriting. It's coming soon.
Thank you, Davon. Have a
Thank
good
you.
one.
Bye-bye.